Oil prices seems to have been energized by some bullish tendencies since our last report. In the current report, we are to discuss the situation in the US oil market as well as factors affecting oil demand and supply in the international oil market. We are going to complete the fundamentals included in the report with the technical analysis of WTI's chart. We make a start by noting that the US oil market shows signs of tightening. On Friday, we note that the halting of the rise of the number of active oil rigs in the US, which tends to be a negative sign for oil prices. Yet the situation was reversed in the coming week as US oil inventories dropped substantially as per API and EIA. The drawdowns reported by the two oil agencies tend to highlight how oil production levels in the US were unable to catch up with aggregated oil demand, implying a relative tightness in the US oil market, an element considered as bullish for oil prices. Hopes of the market for a ceasefire agreement in Ukraine and the agreement for safe passage in the Black Sea tend to weigh on oil prices. On the other hand, the war in Gaza is ongoing, allowing for some nervousness to be present among oil traders. Last but not least, we note US Trump's announcement that the US is to impose tariffs on countries buying oil from Venezuela. The US tariffs could tighten the supply of the international oil market, thus may have a bullish effect on oil prices. As for OPEC, headlines highlight the Oil Producers Organization intentions to increase oil production levels, news that tend to have a bearish effect on oil prices. Oil demand levels are substantially influenced by economic activity in the manufacturing sectors of the US and China. In the coming week, we note the release of China's MBS and Caixin manufacturing PMI figures, as well as from the US and the ISM manufacturing PMI figure for the same month. Should the indicators' readings rise beyond expectations, the releases could support oil prices as they could foreshadow higher levels of oil demand. WTI's price has been on the rise since our last report, breaking the 68.40 resistance line, now turned to support. The upwards motion seems to be supported by an upwards trend line incepted since the 19th of March, and as long as it remains intact, we intend to maintain our bullish outlook. Should the bulls maintain control over the commodities price action, we may see it breaching the 72.20 resistance line and start aiming for the 75.65 resistance level. Should the bears take over, we may see WTI's price action breaking the 68.40 support line clearly and start aiming for the 65.0 support level. Thank you for being with us for today's financial update. We wish you a solid trading from all of us.